Market condition, okay? This is critical. Think of the car auction. It all sounds simple, but it needs to revolutionize your way of thinking about markets and what you're seeing. My hope is that this gives light bulb moments to people and they start to put all these terms together, and we're going to really put them together as we continue. Recent distributions and where price is auctioning now relative to them determine what that market condition is. Are we trading inside a big fat distribution, or are we holding above the prior day's big fat distribution, right? That tells us what the current market condition is. And the current market condition will either be balanced or imbalanced, right? Standard person looking at a trend move, okay? Standard market wisdom is that the trend is your friend. The standard price action trading, which I used to solely use just pure price action. This is what I came from. So the trend is your friend. We need context, okay? We'd call this an uptrend that perhaps the trend line broke and now it's forming a downtrend, right? Well, if we have a higher time frame context, you can even do this with price action, but with market profile, it's even better, as we'll talk about. This is just within a balance area, okay? This market's not actually trending. There's shorter term trends that exist within higher time frame balances. Determining the market condition, okay? This can get extremely complicated because we could say, okay, the market condition is range bound, okay? It's balanced. We're in a big daily bracket here. We could say that we're in an uptrend within the daily bracket, or we're in a 3-day balance at the upper end of a daily bracket. There's different time frames. And ultimately, it's up to you which time frames you choose to operate within. If you're a scalper scalping 5 cents, perhaps this daily bracket's not as important to you. Perhaps this uptrend may not even be important to you. Perhaps the only thing that's important is that 3-day balance, and then you're dropping down to even lower time frames. You, again, must choose the time frames you operate on. You can use this day to day, like we talked about, balance or imbalance. You can identify the current market condition, okay? But if we use this with market profile, this is the same chart, exact same chart, okay? Just looking through profile instead of price bars. We can see the underlying structure of the balance areas. We can monitor value day to day and look at price and that auction relative to value. We can look inside those bars, as we can see. We can see excess, we can see balance, okay? Remember we talked about value and serial correlation. We can actually see this start to unfold on our chart. These closing prices are higher and lower and whatever, that maybe there's no, as market research has shown us, there's no serial correlation there. But look, we form a kind of a 4-day balance here. This day goes higher, and we end up with a lot of up move, okay? Couple day balance, this day goes higher, and we end up with some up move. So I'm saying there's a market condition of balance. As soon as that changes, that's a different type of opportunity in that market, right? Several day balance, value migration starts to get lower. We break out of the balance, and we get a big down move. It's not surprising. Do we ever see false breaks of these things? Sure, but this is just some recent crude oil movement. In fact, I believe I got caught long up in this area on this day, I believe. For those of you at home that have really studied, Dalton and Steidlmayer and Jones and Mesh and, all of these different market profile people, if you open a market profile book, one of the first things you're going to read about is day types and whatnot. I think that's essentially worthless. I really do. Most people think that that's what it's all about, and they turn the other way and they say that's a bunch of mumbo jumbo, as Vic Niederhofer would say. I think there are ways to determine early directional strength or lack thereof when we open up in a market, for example. Like, are we crossing above and below the opening print, right? Or do we actually just trade higher and never look back, right? Obviously, the strong directional market versus a rotational one early on. But another thing that people get hung up on are the shape of the profile in terms of, they'll say, just look for a P. If you see a P shape, we're probably going higher. If you see a lowercase b shape, we're probably going lower. I was having conversations with some guys I mentor this morning about these P and B shapes, and I asked for their thoughts on it. And some of them are probably just studied anything and everything on market profile. They're what I would consider experts on it. And they talk about how, Jim Dalton, for example, would say, we have a P shape. Okay, so we have excess at the low, we ramped up, and then we have a distribution that forms, a balance area on the upper end of that profile. That's why it looks like a P. Okay, he would say that, and accurately, this is not a trend day. This is not a day where new money is pouring into this market. It might actually be a day where we went higher because of short covering and then consolidated. Sure, that could be true. But in terms of using that information going forward, which is one of the things I promised you guys we would do, I just care that that upper distribution is there, and we're going to learn how to see price action movement from that point forward. Maybe we have a poor high on that P. We're going to talk about how price moves relative to those distributions and learn how to actually trade it and how to find great risk-reward opportunity. So that's pretty much it for day one here. We talked about auction market theory, how to construct market profiles, how they're constructed, what they're made up of, what they are, terminology, excess, poor highs, poor lows, balance, value, all this kind of stuff. Balance, imbalance in the current market condition is going to be crucial. We're going to develop ways of really a standardized kind of process of determining the current market condition, and then that's going to guide our strategies and tactics and stuff that we do to profit from that condition, okay? So that's it for today. Thanks for being here and playing along.